Welcome back. In the ongoing conversation that we've been having on this channel about BitFarms, the Bitcoin mining company that has pivoted to AI infrastructure, today we are going to go through their secret plan, their secret roadmap that was just revealed in a recent Twitter Spaces or X Spaces with some of the, as they call them, bit farmers, is people who are holding the stock, investors in the company. They had this with Ben, who is the CEO of BitFarms, and Ben has promised spaces for conversations with investors at certain milestones. And this first milestone was the $5 price that BitFarms has been going kind of a resistance level, right? Above and below it. But this is not about the price. This is about the long-term journey of BitFarms, where BitFarms is today, where BitFarms is going, where they kind of stand in this whole AI infrastructure space. And I think that if you haven't already heard this spaces, this video today is probably going to make you even more bullish than you were. Because we are going to hear from Ben directly on what their thesis and what their strategy is, what they have been executing on for well over a year in this pivot from Bitcoin mining to AI, from global expansion to specific US expansion. And this is, in my view, very bullish. But these are just my opinions. We're going to give some commentary as we go along through the spaces. You guys can listen to this. We're going to be playing at about 1.5 speed. Keep that in mind. And as we're going through that, I'll be kind of exploring the website here and giving commentary along the way. So make sure you guys are subscribed to this channel. We upload every single day of the year to bring you the latest happening in the financial world. Sometimes we talk about individual assets like we're doing today with BitFarms. And sometimes we talk about the macro environment in the finance space to understand what is a good investment, what is not a good investment. Nothing I say is financial advice. Everything we talk about on this channel is just my opinion and analysis, but I want to hear from you guys with your opinion and analysis down below in the comments of this video. But let's start right here. This is about 1.5 hours, so we are going to be skipping around and also playing this at a faster speed. Otherwise, we're all going to be here forever. But the content here is, in my view, very, very bullish for BitFarms and really puts BitFarms in a separate category from the rest of these AI pivot Bitcoin mining companies like Cypher, Iris Energy, and all of that. And you're going to hear a little bit about that from Ben. So let's get right into it. Give the video a thumbs up, hit subscribe, and let's listen in. And by the way, this was recorded in the middle to end of October 2025. But the content, whenever you're watching this, is, I think, still going to be relevant and valid to kind of see through what their roadmap and secret plan is. Let's listen in.
Yeah, absolutely do. You know, and
That's
I'm sure
Ben,
there's a lot
by
of
the
money to be
way.
made amongst day trading, and I know there's a lot of people day trading the stocks. It's very volatile in the space, but when you understand what the opportunity is that all of the Bitcoin miners doing this transition are pursuing, this isn't something that's going away tomorrow. This is something that's going to play out over years. And I think the most, the best way that you can actually play this is by thinking long term and looking for the right opportunities. Find the plays that you've got conviction in, and going into those plays and trying to hold for a period of time that's measured in at least months, if not years. But there's a lot of day traders out there, and those are going to be the ones where they can make a lot of money, but you can also lose a lot of money in a short term. I think there was a lot of some kind of fear and some negative comments surrounding our raise that we did last week. But if you've been here for anything longer than a week, you're probably in the green, and you're probably sitting pretty on your investment, and now you're invested into a company that's sitting on about $1 billion of financial firepower to go out there and cook with.
I want you guys to think about that. What Ben just said, by the way, you're going to hear some of the other people, some of the hosts asking questions along the way, but that voice that you just heard is Ben, the CEO of BitFarms. And yeah, I mean, we know that BitFarms just raised about $500 million. You're going to hear a little bit more about that in a minute. But BitFarms is sitting on $1 billion in cash right now. $1 billion. And this is going to significantly accelerate pretty much all of what they want to do. Because a lot of other companies, they're putting their money into things that like Bitcoin mining machines or GPUs for the AI infrastructure. And you're going to hear from Ben in just a minute. They have a very different plan. They don't want to own the equipment because the equipment is constant. It's a constant battle to just buy new equipment, buy the best equipment. The equipment depreciates and all of that. They're sitting on $1 billion to expand their data centers and, more importantly, the energy. Let's continue listening in.
And this is a very great opportunity to be here at BitFarms. It's a great opportunity to be investing in the space, and we now have twice as much money as this company was worth in June. So personally, I think we're very excited about this over here. We pulled off a fantastic raise, and I think everything that was in management's control we handled really well. It's unfortunate that the regional bank rumors started spreading around the end of last week, but other than that, everything that we had in our control, we executed on very, very well. I'm very happy with the outcome of the raise.
Yeah, that raise I think was timed very well, extremely well. When you see your stock has ran up that much, and given the
Again, we're going to be
it was a very large
skipping.
upsize deal. There was just a tremendous amount of demand. Frankly, it exceeded my wildest expectations for how much demand was out there and the pricing that we could get. So, it made sense to upsize the deal, and we were able to do so even while bringing down the cost of the convertible. So, really, really fantastic outcome.
They went from $350 million, which was what they were trying to raise, and they ended up getting $500 million. And like I said, we're going to be skipping around and kind of skipping over some of the speakers because we really want to hear directly from Ben.
Yeah, I would have to agree with that. A lot of people afloat last night, and then we'll have one of the things that we filed it, and I looked at. Do you have any comments on the site in terms of the size, how much land you need, and where you are along in terms of perhaps negotiating with potential customers if you're able to divulge such information?
Yeah, I'm happy to get into all these sites. And for everyone who's new on the call, I think our portfolio is very unique. If you look at our portfolio, we've got 18 megawatts in Washington, which is the smallest area that we operate in. But we have 170 megawatts in Quebec, and we have over a gigawatt in Pennsylvania. And so we don't have the largest portfolio of power amongst the Bitcoin miners doing the transition, but we do have the largest portfolios of power in each one of those three regions. So we're not in Texas. I think that's the big thing to focus on. Everyone I think
Yep.
really went down to Texas for good reason, and the reason is that you had a lot of volatile energy supply, and volatile energy supply created volatile energy pricing, which meant it was really good for energy trading and Bitcoin mining. But when we were investing in our regions, our thesis was it's not the Bitcoin miners, which are the core value that we have as a business. It's the energy contracts and the energy infrastructure that we use to power them. And the Bitcoin miners are just a way to monetize our assets. And so the areas that we have, these are really energy-rich regions. These are energy exporters. And Washington State in particular was our first expansion outside of Quebec. These are both areas with huge amounts of installed hydropower generating capacity. There's about 14.5 gigawatts of installed hydro capacity in the Columbia River Valley region in central Washington where we are. And that's what's created the largest data center cluster on the West Coast, is this huge abundance of cheap renewable hydropower that there's more generation capacity than there is demand or transmission capacity. And so that creates a real ceiling on the price. And even though that site is the smallest one that we have in our portfolio in terms of an area, that has the cheapest power in North America, in the United States for data centers. It's about $30 a megawatt hour. It's 100% renewable, and there's a 10-year wait list for new power. So what we have secured is something that's really unique. It's really rare. The smaller scale makes it really easy to execute on. The cash that we just raised for this convertible, is more than sufficient to do the entire Washington conversion, as well as be allocated to a bunch of our other sites.
Now, let's just pause here for a second, because what he said about Texas is really important to understand. Historically, a lot of these Bitcoin mining companies were in and are in Texas because they were able to access the energy at a different level than the rest of the country because of how Texas does their energy grid. We're not going to get too deep into it, but now, what Ben is talking about is AI. And specifically in Washington State and also Pennsylvania, they are very close as well to these the intercontinental wires that go basically from one continent to another, the deep sea wires. And so this is important for AI because AI needs the bandwidth. They don't just need energy; they also need bandwidth to connect to the internet, to connect to the world. And so, what Bitfarms has, in my view, is very unique amongst these Bitcoin mining companies because they have capitalized on these areas which they basically, you're going to hear a lot about this energy. They're basically going to have the energy way before, years before any other company is able to get it. And they're first in line because they've been preparing for this for several months. So let's continue listening in.
But this is a really high demand region that even companies, the large hyperscalers who normally wouldn't go that scale, they're interested in that scale because it takes 10 years to get power in that region, and you just can't jump the queue. It doesn't matter if your name's Amazon or Microsoft or Meta. The queue is the queue, and the queue is sacrosanct, and you really have to acquire energy that's already there. And so, what we have is a really interesting development opportunity, a very quick development opportunity, something that's very affordable, especially with the money that we just raised in that convertible, and something that we can execute on really quickly as, probably the first site that could be fully converted, deployed, leased out, and generating HPC revenues. So it's a really exciting site, even though it's a smaller site. And we've got a lot of demand there, and we thought it was just going to be enterprise customers. But as we've been working through the plans and going through the go-to-market on this, we've actually found out that there are hyperscalers who are interested in this kind of scale because it's just impossible to get power there.
Yeah, when I hear hyperscalers being interested, the first thing that comes to mind is
in the area called Grant County, you've got Microsoft, Meta, you've got Cisco, Cyrus, Vantage, you've got all the major players. And so I think right now the big focus is on HPC and AI with GPU, but there's also a huge demand for the more traditional data storage and the other applications. It might actually become a site that has more than one utilization. There's just so much demand to scale up in that region. But what we've actually just done is we've completed all of the engineering and site plans for GB300 conversion. We're pretty excited about it. The site is looking like it's going to be pretty energy efficient. We're looking at about 15.8 megawatts of critical on 18 gross, which is a very high PUE efficiency. It's way higher than you get in places like Texas, where if you took that same design, you're probably going to be closer to a 1.4 or a 1.5. And so even though that site's smaller, what that means is that for every megawatt that we have, more of it's going to compute and more of it's going to generate revenue, which means that the megawatts are just that much more valuable. So it's a little too early to say exactly what the end use case is, but what we've designed it for is GB300s, and that would be about 80 to 85% liquid cooling, with the remainder being air cooled for more of the traditional components.
Yeah, that sounds very exciting. And I just worked out the numbers as you were speaking, right? You said it was about 15.8 megawatts of the 18 megawatts. So that works out to be about 1.22 PUE, which is quite good, right, for GB300s. And so for GB300s, these are in very high demand. You said before that you would do, pass through the, I don't know if this is correct, but passing through the compute, if it makes sense. I guess that would be enough.
We're going to skip a little bit.
Right? We're not buying GPUs to compete in cloud. We're not trying to compete with Amazon or Microsoft or any of those companies.
This is really important. I want you guys to pay attention to what he's saying here, because the other Bitcoin mining companies that pivoted to AI, they're buying the GPUs and then they're leasing them out. So listen very carefully to what Ben is saying here about this.
The compute.
Yeah, so to be clear, right, we're not really interested in doing cloud, right? We're not buying GPUs to compete in cloud. We're not trying to compete with Amazon or Microsoft or any of those companies. But when it comes to enterprise customers, there's a lot of enterprise customers out there which are investment grade companies who have data center needs, but they don't want to build or operate data centers themselves.
Bingo.
And so there are situations where we could get the financing on the GPUs and we could all basically make it pass through, where we can get additional margins and markup on the compute without actually owning the depreciating asset. And I think that's the real key thing for us if we're going to go up the stack and get the GPUs is I don't want to own the depreciating asset. And there's differing views on what that looks like, but we know from Bitcoin mining how compute markets function. And the reality is that it's very capitally intensive. And for every dollar that we spend in infrastructure, somebody's going to spend $3 in compute. And that's been true in Bitcoin mining. It's been true in HPC and AI so far. That ratio might actually go worse to the point where people could be spending $3 to $5 in compute for every dollar that I spend in infrastructure. And the reality is that compute grows in supply exponentially every year, and per unit costs or per unit economics of compute decrease exponentially every single year. There can be blips up, but the trend is pretty clear. If you take any sort of multi-year look at those trends, it's unmistakable which direction each one goes. And when you look at kind of how fast the supply is growing of compute and how much these companies are allocating to compute, I mean, it's in the billions of dollars that these companies are allocating to compute. And the amount of GPUs that are being produced is just so much more than the megawatts that are being installed and the racks that are available to plug them in. And so by the time 2030 comes around, it's estimated that there's going to be over 100 gigawatts of GPUs produced between 2025 and 2030. And there's only going to be 30 gigawatts of new generation coming online in the US, and there's anticipated to be a 45 gigawatt shortfall. And what happens when you've
So let me pause here for a second. This effectively is what Ben is getting into, is how they're becoming the energy for the data centers, right? This is the same issue that Bitcoin mining companies have, is the Bitcoin mining machines. It becomes more difficult to mine Bitcoin as time goes on. And so the machines become, deprecated. Like they're inefficient, right? It's the same way that your cell phone from 15 years ago, the iPhone 1, doesn't really work anymore, right? And it doesn't have all the features that you have now. And so you have to keep upgrading your phone every single time they have new features or new, bandwidth or a new signal or whatever the situation is. And it's the same thing with Bitcoin mining and effectively with AI as well, right? The GPUs that compute AI today, probably by 3 months from now, they're going to have new machines that are even better and more efficient and can do more and are needed. And so if you're buying these machines, this is the same issue that we saw in the previous cycles with Bitcoin mining companies that went bankrupt. They were pre-ordering and prepaying for Bitcoin mining machines, and they got them a year later in the bear market when energy prices were up and those machines were already outdated. And so that's the kind of situation that the Bitcoin mining companies are in, and these AI compute companies. This is where I kind of got it wrong. AI compute is different than AI data centers, right? The data center provides the bandwidth, the fiber optics, the connection to the internet, and the energy. And what Ben is saying is they're going to have so many of these machines in a few years, but they're not going to have the energy to run them. And this is where, in my view, BitFarms is doing it different. Let's continue listening in. And by the way, don't forget to subscribe to this channel because we update every single day on the markets. We talk about deep dives like we're doing today into an individual asset like BitFarms. But sometimes we talk about other assets. Sometimes we talk about other stocks. Sometimes we talk about other crypto. And every single day, we talk about the macro, what's going on in the general finance space. And we've been doing this almost every single day since 2018, completely for free. You can also support the channel by becoming a channel member by clicking join or subscribe plus down below here on YouTube. We have a few different tiers. The lowest tier is $1.99 a month. I think all of you would agree that this information that we talk about on this channel is probably worth that. But anyway, let's get back to Ben.
Allocated billions of dollars into compute, and it doesn't matter if it's Bitcoin miners or GPUs for AI. But what happens is that you're sitting there with an asset, and if you can't plug it in, every day you don't plug it in is a day of revenue you'll never recover. And every day that you don't plug it in, that's depreciating because new units are being shipped, new data centers are coming online, new models are being introduced every 12 months. And so, if you're not plugging in those GPUs, the reality is that the demand that you have is going to move over to a customer, and you're going to be sitting there with a depreciating asset. And so our thesis is that over time, the economics are going to continue to favor those who own the energy infrastructure. And this is part of the reason why we haven't been in such a rush to sign an agreement, because these economics are only getting better. And we've seen this in the market. When Core Scientific did their first deal with CoreWeave, it was like $120 per kilowatt per month. And if you look at the contracts that people have been signing recently, whether it's the Cypher deal or the Wolf deals or any of these other deals, they're a lot closer to about $150 per kilowatt per month. And the economics are continuing to get better because the end customer who's purchased those GPUs, who's made that fixed investment into the GPUs, is sitting there with very few options to plug it in. And you look at what are the direct operating margins on the GPUs, which I know a lot of people like to focus on because they're very high. They're in the high 80s, maybe in the low 90s. And the energy is not really a big driver in the direct operating margin. So if you pay 25, 50%, 100% more on your electricity or your rental, it's only going to impact your direct operating margin by a few single-digit percentage points at most.
Yeah.
And so for a company who's sitting there with billions of dollars already invested, they're much more likely to incur a lower direct operating margin than they are to let their assets bleed out on the ground. And for us, I think we've positioned ourselves really well with the assets that we have because they're all the regions that we operate in. It's a multi-year waitlist for power. It's actually pretty easy to go out there and get power in some areas of the world. Texas is one of the easiest markets in the United States to go out there and get power, and there's a lot of advantages to that. But in the areas that we've got power secured, it's years. And in the case of Central Washington, it's a decade. And so, we know what we have and the value of what we have.
Yeah.
And, the longer out you go, the more likely it is going to be to go in favor of those who own the energy infrastructure. And, when you're looking at, should we go up the compute stack or not? It's just so capitally intensive that the reality of it is that, cost of capital is going to determine who wins. If I'm trying to compete with Microsoft and Google on cost of capital, I've already lost the game. It's over.
Yeah.
But if I actually solve a problem for Microsoft and Google and Meta and those kind of companies, what's going to happen is I'm going to use them to drive down my own cost of capital. And I'm going to be able to position myself and my infrastructure assets so that I can get the most value per megawatt and I can lock in the longest contracts that I can. And that, for investors, I think the key point, because what we're going to achieve here, what we're aiming to achieve is to try and maximize the amount of the value per megawatt for the longest period of time. And that's where we're going to get the best multiple expansion out of the transition. And so I think from our perspective, the best way to position ourselves is on the infrastructure side. And there could be some limited scenarios for enterprise customers where we can do a pass through on the compute where effectively we're sourcing it for them, we're arranging the financing, and then it all gets passed through to them, and we don't actually own that depreciation where it makes sense. But that's where I'm solving a problem for somebody, as opposed to me trying to go up the stack, and because I think it makes economic sense.
Now, I've heard a lot of critiques about BitFarms and Ben as a CEO. Let me just be very clear, guys, right? Ben started at BitFarms around 2 years ago, maybe a little bit longer, a little bit less, but not for that long. And when you hear what he's doing, right? Number one, he may be watching our videos here, right? Because a lot of what he's talking about is what we're talking about on this channel. And this is not rocket science, guys, right? These other companies are doing things that are probably going to continue to increase the price and the valuation of these companies and the need for them. But you want to look for a differentiation, in my view. And I think that what Ben has been doing over the last year and a half, 2 years, is very high level, is very good. I think he's probably one of the best. I mean, guys, I would not put my money into a stock if I didn't think that the CEO was competent. And to see people criticizing what he's doing in the short term because the stock price is not moving or moving as fast, and they're not listening to what he's doing, what the company is doing. I mean, for me, it was very clear that this was a buy in 2024 when Riot Platforms tried to take over the company at $2.30. And then they ended up selling in 2025. They had about 20% share in BitFarms because they were trying to take over the company. And they bought it around $2, $2.30. And BitFarms is like, no, we're not being acquired. And so that told me they knew they had something special and that they didn't want Riot Platform. And Riot Platforms is behind. And I think that they're behind because they spend so much time, money, and energy into trying to acquire BitFarms. And BitFarms is like, it's not happening. And then this year in 2025, they started offloading their shares in the stock at literal all-time lows. And instead of let this continue to drain the stock, Ben turned around and he was like, nope, we're going to just start doing stock buybacks. So they're actually buying back the shares that Riot is selling effectively. I mean, this is literally what they're doing. And so, people who are criticizing what they're doing, things take time to cook, right? And if you're not hearing what the plan is, what the roadmap is, what their thought process is for what they're doing, you're missing the point, right? Everybody's focused on Iris Energy because this advisor, this investor is saying, oh, this is the best company, this is the best company. But you can look at Jim Chanos and he is raising the red flag specifically on what Ben is talking about. Jim Chanos is a well-known short seller, and he is basically saying Iris Energy is continuing to go up in valuation and everybody's pumping it. But they own all of this equipment, and they're just leasing it to these companies. But they have to continue to put more money into more machines and better machines. And it's the same thing like with Bitcoin mining. You make a lot of money, but you're also spending a lot of money. And Ben wants to be the infrastructure for all of that. You need the power, we have the power. You need the fiber optics, we have the fiber optics. But you got to bring your own machines. That's exactly what he's saying here. This is more bullish than probably I've ever been. I mean, I was listening to this after they had the spaces, and I was like, shh, maybe I don't own enough. But anyway, let's continue listening in.
I think for us, it's infrastructure, and sometimes the GPU can be infrastructure, but I think most of the time, I'd really rather focus on the racks and the power.
Yep.
Okay. Yeah. So from what you're saying is, if
we're going to
turnkey,
skip
that they can,
for these kind of facilities, like we have a great reputation, I think, for how we build and we operate our Bitcoin mining sites, but they're leagues apart from the kind of data centers that these other customers are actually building and operating. And when you go through the MSAs, which are these master service level agreements with these hyperscalers, there's tremendous economics for performance, but there's also tremendous penalties for underperformance or late performance or failure to deliver something. And the reality is that I don't think a lot of investors really understand what the cost of underperforming is. In Bitcoin mining, if I don't plug in a Bitcoin miner, like I just didn't plug in a Bitcoin miner and I plug it in later. But in HPC, especially when you're dealing with these multi-billion-dollar contracts, if you're late or you're underperforming, the penalties can be pretty severe. And so I think one of the big ways to de-risk that and create the most value is by working with groups like we're doing in Pennsylvania with T5, who has done this for the last 30 years. They work with every hyperscaler. They work with CoreWeave. They build data centers for them. They operate data centers for them. They know how to recruit and train the staff. They know their requirements. And then you would match a what would happen would be BitFarms would match as close as possible an MSA with a third party as the MSA with the end customer, and in that way we can really mitigate those risks, ensure a much higher level of performance, because the value is not on the O&M. The value is on the access to power and the infrastructure. And so if I can de-risk my business by working with parties that these customers have already worked with, they're already working with today, and brings a lot of reputation, a lot of skilled expertise, that's a great advantage for us. And we can really focus on what we do best, which is developing the energy infrastructure and capturing the best value that we can for the energy infrastructure, and bring in these third parties to help us manage the actual O&M of the data centers themselves. And over time, maybe we learn that, and maybe it gets better, and that's something we want to internalize to kind of juice the margins up further. But certainly for the next couple of years, that's not going to be our focus, and it's purely going to be on development, and then we'll be outsourcing the operations to trusted third parties.
O&M is operations and management.
Yeah, it was interesting timing that you brought up the SLAs, and
it's going to be expensive.
Yes, that's going to be quite that I've uploaded before we.
The money hasn't gone out, the deal hasn't been closed.
Land from Carlisle. So people want to, look at my post and follow along. It might give better context, right? And just one final question about Washington before we move on. Did you purchase the excess land from Carlisle?
We're closing on that right now. So the land is secured. We're going through the last kind of checks on the land, but yeah, the land is secured. It's our land. The money hasn't gone out. The deal hasn't been closed, but that should be closing in the next probably 6 to 8 weeks.
And do you know Doug Robbins? Is that a name that rings a bell?
Because the name doesn't ring a bell. Spot on. I've gone through that post, and you figured out each of the individual lots that we have we've locked up. So you were spot on that.
Okay.
Right here, they're talking a little bit about some of the land that they're trying to buy to expand some of these data centers in Washington specifically. But I think that we're going to be moving on from Washington now.
I don't think there's much going on between Scrubgrass and Panther Creek, and that's the on-site generation. When you first explain the islanding at these two sites because of the on-site generation, right? I don't think a lot of people understood that or were aware of the fact that you could do this kind of islanding at those two sites. Would you like to be able to repeat?
By the way, we're going to speed this up to 2 speed.
The islanding thesis at these sites.
So we've got a couple of different buckets of power at the 2 power plants that we own and operate in Pennsylvania. We obviously have the power plant itself, which are both currently operating, generating power today. We have what's called an ISA, which is basically an agreement with the utility to draw down from the grid a similar amount of power that we could produce and sell into the grid. So we can flexibly draw power from the grid or from the power plant. And then we have a third category, which is new grid connections. And when we started looking at these sites, it was back in 2021. And back then, the energy market in PJM was really depressed. These power plants were starting to trend down in value. And the reality is that the sites that we acquired switched over to Bitcoin mining because the energy price had gone so low. It no longer really made sense to operate these power plants and sell power to the grid. And so they were looking for an alternative use case. And when we first started looking at these power plants, what I quickly realized was the opportunity was to double down on the power. So if the power plants can do 80 megawatts, which both of them can do, we can also draw down 80 megawatts from the grid, and we can get 160 megawatts for 80 megawatts of infrastructure. And that 2-for-1 special made a tremendous amount of sense, especially when it came to Bitcoin mining and energy trading. But when we were advancing with this transaction in January of 2024, what we were looking at was what is the opportunity to scale even beyond those with additional grid connections. And so the previous management at Stronghold had started to make new power applications to expand past what they already had and get new lines built and new substations put in. And these were being done at the very beginning of 2024. So before CoreWeave and Core Scientific, before the big focus on HPC and AI, these applications were being submitted and were being processed. And so when we were underwriting the transaction in June, July, and August, when we finally announced in 2024, we were underwriting with the thesis that there was value in the power plants and the power that was already there, but there was also significantly more value in the power applications that were submitted and were leading in the queue. And those are really hard to replace. The power application now at Panther Creek is secured, it's in place, and there's nobody ahead of us. Those power agreements have been signed, they've been executed, and they're contracted for delivery in 26 and
pay attention
so
here.
50 megawatts secured for end of 26, 300 megawatts. Technically, the contract says the first 2 days of January 2028, but we've been told repeatedly if you have it built in 27, it's going to be delivered in 27. And the ability to go well beyond the power plants is a significant advantage. Now, there was a thesis around islanding the plants originally, and islanding the plants makes a tremendous amount of sense because it would get us away from the regulatory restrictions around having a power plant hooked up to the grid, which, especially with the Talon transaction that happened last year, got caught in a big regulatory catch-all. And a lot of data center companies are looking at how they own the generation now, because if you don't own the generation, you're not in full control of your energy. It could add years onto your development timelines. It could add a lot of regulatory uncertainty. So there's a lot of value in owning the energy generation. Microsoft, Amazon, Google, they're all making announcements about investing in the energy generation. And as far as I know, we're the only public miner that actually owns and operates our own power plants. I think maybe outside of Greenidge, if they still operate that site in New York. So having that is a real advantage, but it's not the end all be all. It's a relatively small percentage of the total power available at these sites. And when you look at the capacity auction payments, which are currently now at multi-decade records, we're just getting paid to have the power plants there. So we receive millions of dollars in payments just to have the power plants there and connected to the grid. And so we think that FERC and Talon are going to figure out that power plants co-locating with data centers is not actually the problem that FERC originally thought it is. It's probably the solution, because there's a lot of concerns around higher energy prices right now, and the reason why that happens is because when somebody makes a data center application, they assume that they're going to always draw power regardless of what the underlying price is, and that's something that both the data center makes the assumption of, and as well as the grid makes the assumption of. And what Bitcoin miners know really well is exactly what these peaks in power demand mean for energy distribution transmission constraints and for max pricing and how that gets amortized over a much greater period of time. And the reality is that when you're investing in HPC and AI infrastructure, and the industry uses a rough rule of thumb, which is like $10 to $12 million a megawatt for the GB200 infrastructure, the reality is you could be spending $3 million just on the backups, just on the diesel gens and all the different storage systems for the diesel, the UPSs, the batteries. Like you could be spending, somewhere close to 30% of your capex to deliver 0.3% of your uptime, which is a pretty wild ratio of capex to uptime performance. And if you just utilize that infrastructure, which you've already paid for, and you utilize it more than the 30 bits a year, and you utilize maybe 3 to 4% of the year, and you are able to shave those peaks off of the peak demand, the reality is that those energy prices, which everyone expects to go up, are probably not going to go up because there's a lot of energy out there. Where the energy prices goes up because these energy peaks are going to be exacerbated by the data center applications as they're currently designed. But if you anticipate a little bit more of a flexible utilization of your backup sources, like Bitcoin miners have kind of proved out through the curtailment load response, but in this situation, maybe it would be using your diesels or your batteries. You could provide a lot of the same grid stabilization benefits and cost reduction benefits for the consumers. You can save a lot of distribution transmission upgrades, and I think that's where all of this is going to head to. So I think we're going to be successful there. And in the meantime, we might as well just continue collecting the capacity payments because it's very meaningful revenue, and it's just free money to just have the power plants there hooked up to the grid to just collect those.
And so what you can hear from what Ben is saying here is they're making money whether they're using the power for AI or they're just putting it back to the grid. And so they are still running Bitcoin mining facilities. They're still generating power and they're expanding and they're first in line. You're going to hear a lot more about this for the energy in a lot of these areas. This is so bullish for this company. No matter what path they go, like if they flip back to Bitcoin mining in a few years, if they get major contracts with some of these AI companies, because they have what these companies need. They have what the Bitcoin mining network needs. They have what effectively everybody needs, which is energy. And that is, in my view, the differentiation between this company and many of the other Bitcoin mining companies that pivoted to AI infrastructure. Let's continue listening in. And by the way, I'm going to be switching from 1.5 speed to 2x speed. If it's too fast on YouTube, you can change the speed slower to get it back to normal speed. But otherwise, we're going to be here forever. Let's continue listening in.
Okay, so if I understand correctly, if from what you said and what the presentation says, are you looking?
300 megawatts contractually guaranteed at the end of 2027. And then we have the power plant and the ISA, which could extend the site and expand that beyond the 350 to 410 or upwards of 470 if we both use the power plant and are able to convert the ISA into an ESA. So that would be converting over the kind of interruptible service agreement to a firm service agreement. Those are both, I think, possible and likely to go in our favor, but subject to FERC regulatory issues being sorted out at the Talon transaction. And that will set the precedent for all the other power plants trying to co-locate with data centers. So there is ability to extend beyond the 350, but it's subject to those regulatory issues.
Yeah, that was my next question in terms of for the capacity at these sites. You mentioned that you can.
I will make the preface here before I get into the details that it's the only site that we have in our portfolio where the power is not fully secured today. So, all the other sites that we have, they're contractually guaranteed power. Sharon is about 30 minutes away. There's 110 megawatts of contractually secured power there for 2026. We're building the substation to go from the 30 megawatts of Bitcoin mining now to the 110 megawatts with the dual redundant substation that we need for HPC and AI. But Scrubgrass is pretty exciting because we believe it's the only site for a public miner doing this transition to HPC and AI outside of Texas that has over 1 gigawatt of total capacity. Now, a lot of work still needs to be done. A lot of work has already been done to validate those figures. And we know that as time goes by, the demand keeps getting larger and larger. Over the next couple of years, people are going to want gigaclusters. And it's really hard to get that kind of power in one location. IREN has 2 sites in Texas like that. Riot has 1. I'm not aware of any other site outside of Texas amongst the public miners that has this kind of potential scale. And we have a lot of benefits for being in Pennsylvania with the proximity to the major metropolitans, to the East Coast, to the traditional data center alley infrastructure, to all the undersea fiber optic cables that go off to Europe. There's a lot of value to have that kind of a scale in that area. And the way that breaks down is, and there'll be some more information publicized on this on our Q3 call. We'll update the deck to include a slide specifically on Scrubgrass. But there's kind of 3 buckets of power. There's the existing power plant that we already own and operate that has the same sort of ISA that Panther Creek does. It's actually the exact same turbine made by GE that's sitting there in that power plant. But we also have completed not one, not two, but three conceptual load studies with First Energy. And so this was one of those power applications that was put into the grid back at the beginning of 2024. And every time it's come back with green lights, we've updated the power application to get more power, because there's so much power on this 345 kilovolt line, which is 2 miles north of our site, that the green lights just kept coming back. And so we started with a 250, we
Pay
updated to a
attention
500.
here.
We just completed a 750 megawatt conceptual load study, and that's going to be moved over to a detailed load study. From a detailed load study, and that could take 6 to 9 months, it could take longer, but that's really the full engineering of all the different ways that 750 megawatts at that site could actually impact all the local energy infrastructure in the area. And then once that's done with the DLS, it would move over to an ESA. Now, we're really excited about that one and pretty confident about that because there's so much power on the line. And there's actually a natural gas power peaker plant 2 miles north of our power plant as well. And that power peaker plant is designed with really specific kind of turbines, which can be functioned as a load bank or it can function as a power peaker plant. And because there's so much supply on this regional distribution line, actually that power peaker plant is often more used as a load bank in order to pull power off the grid because there's too much supply on the grid than to put power on the grid because there's not enough power. So there's so much abundant capacity on this line. There's a 330 megawatt power plant that just absorbs that power as opposed to generating power in order to stabilize the grid. So we think that is probably going to move forward. But again, it's not secured. It's not guaranteed. There's still a lot of steps that need to go forward before that becomes contractually guaranteed power. But it's well advanced. And the way that the queue works is, everyone who's in the queue in that area needs to wait before our application is done before their application moves forward. Because if you can't process two simultaneous applications because you don't know what, if our application, moves forward or if it was revised, it would impact the other applications behind it, right? So we were able to keep our spot on the queue and keep updating it and getting more and more power. And that just means that everyone else is still waiting for us behind us. So we're first in the queue with a tremendous amount of power. And then the second part of this is that there's actually the second largest natural gas pipeline in the United States called the Tennessee Natural Gas Pipeline. It is 3 miles north of our site. And so we've actually been working with the pipeline operator to validate the availability of gas and the deliverability of gas. We've done a lot of engineering work on that. And we've confirmed kind of the pathway to build what would be a 4 mile pipeline to the 3 miles north of the connection because it's not exactly a straight line. And really the last component we're trying to work through is this under the river piece, which is the most complex engineering and the most complex permitting wise. So there's still a lot of work that needs to be done there too, but this is the second largest natural gas pipeline in the US. And there's so much capacity on the line that they would love for us to be able to offtake there because then they'll just be able to pump more gas in. And so there's this very big opportunity to increase the generation capacity at our scrubgrass site. We've confirmed that there's over 500 megawatts of gas available that we could add onto our site. And so you add up the additional grid capacity, the additional generation capacity, this site could go well over a gigawatt with additional generation, with nat gas, abundant nat gas in a cool climate, additional grid connection. This is a really, really interesting site. But a site that, is the only site in our portfolio where the power still needs a lot of work to make sure it's secured and it's fully there, because until something's contractually secured, we don't include it as a guarantee because anything could happen in this world. And there's still a lot of work that needs to be done to validate that. But we believe that this is probably going to be the crown jewel in the portfolio in a couple of years. And it's going to take probably upwards of like 2028 to 2029 to really bring on that new infrastructure. But that is a pipeline asset that as we focus on our 2026 power and our 2027 power, we'll be focusing on the energy on the 2028 site with scrubgrass. And it lines up really, really nice with all of our other development opportunities to have this giga campus coming there in the pipe in 2028. Doing anything about that.
Now, there's some noise from Ben's family in the background, so we're going to skip ahead a little bit. But you guys can see kind of what the plan is, how they're thinking about this, how they're moving forward. They're getting all the regulatory permitting and approvals in queue so that they're first in line for when these do, or if these do get approved. And so they do have a lot of secured capacity, a lot of secured energy, and they also have some that's in the pipeline that is hopefully going to be approved. I mean, everything the way that AI and AI infrastructure is kind of rolling out and the support that we're seeing from all levels of the government, it seems like this is going to kind of pan out. And again, they're doing things very different than all of these other companies and all of these other infrastructure plays. Let's continue listening in.
In terms of gigawatt sites, you are correct, right? Riot has one, Iron over to 1 gigawatt. A unicorn in the making. And this is if you were able to cook this one.
Because it's a pretty exciting one and there's lots of gas to cook with. But it's until it's secured, it's not secured, right? So this still remains like a high potential site, but not anything that is very, this is contractually guaranteed by any means. But there's multiple different pathways to increase the capacity at that site that we're working on that are in progress. And as we get it secured, obviously there's going to be press releases about that. But there's a really, really exciting opportunity at that site. And we've got such good opportunities to develop in 26 and 27 that I don't need to focus on developing every asset that we have all at the same time. I actually don't want to do that. This is a this is an execution game right now. And if you're not executing on the power assets that you have, then nobody really cares. And so I'd much rather get done what we can get done and what is kind of low hanging fruit with our 26 power than focus on the 27 while we're kind of working on the power story here for 2028 in the background for Scrubgrass. But it's a really, really exciting opportunity. And yeah, there's not a whole lot of sites like this out there.
Oh, definitely. Anytime you get a gigawatt site, that's in your
lines up with what the potential hyperscaler customers
form.
So T5 helps us validate all of the architecture engineering. They help us with all of the different, handholding on the permit applications, making sure that everything lines up with what the potential hyperscaler customers are looking for from an A&E perspective, and also helping to make sure that, as we're going through the processes to what's called like the RFI and the RFP for the general contractors and all the different service providers for helping us build the site, that process is managed properly and that we're getting, the best possible terms and the best possible service with the best possible counterparties and everything else. One of the reasons why we like T5 is because they do everything from kind of the initial steps where they've been helping us out over the last couple of months, all the way through to actually doing the general contracting themselves, to doing the operations and maintenance, to doing the upgrade of a site, in several years down the line. So this is an agreement where it's relatively limited scope on the initial phases of construction, but it's a flat fee based structure. There's no percentage of the site or ownership, entitlement to the site or any of the revenues, and it's an agreement that continues to be expanded as we progress through the site, so that we can work with one high quality service provider who is already well known and trusted by all of the hyperscalers and CoreWeave and a lot of the other neoclouds out there that bring a lot of execution and de-risking to the project. So it's a great partnership. It's one that we would be looking to expand in the future as we continue to progress on the site, and one that can be expanded and expanded all the way through the commissioning of the site and the operation of the site for years to come.
All right. Okay, so I'm gonna hand it off to Butcher now.
Just one thing that kind of covers what I
highlight a little bit on the cap call, because I don't think everyone fully understands what a cap call is and how that functions, but to kind of put it.
So now he's going to be talking a little bit about a cap call, and this is part of the money that they raised, right, and how they structured the deal. And so you can see it says here, opportunistic capital raise for general corporate purposes. Either the net proceeds of this offering or cash on hand is to be used to purchase cash settled cap calls to offset economic dilution up to a cap of 125% premium to the last reported sale price of BITFARMS. And so people, including myself, did not understand what this cap call situation meant. And so he's going to explain it here, and then we're going to kind of wrap up and give my final thoughts. And by the way, make sure you guys are subscribed to this channel and give the video a free thumbs up. Let's listen in.
Simply, it's like the company buys a long-dated option on its own stock. And so when you take the proceeds from the convertible, a portion of those are being used to buy an option on the stock that will help to cover the gain in share price from that up 30% conversion premium to the up 125% premium. And this is something that is an option for the company to do. And typically what happens is companies who are bullish on their share price and the opportunities that they have, but still want to raise cash today so that they can move forward more aggressively with their development and their execution, can still preserve a lot of the value and protect against a lot of the potential dilution that happens as the share price goes up and that capital is being deployed accretively. And so I think our peers are largely doing up 100% cap calls. I think that's generally how it's done. We opted for a 125. You can go higher if you wanted to. Nobody really goes up to 150 other than I think Elon Musk is one of the few examples who did an up 150 cap call. But it's generally pretty rare to go beyond 100. But because the company is incredibly excited about our opportunities and what we have rolling forward, and we still continue to believe there's tremendous upside in our shares as we execute against this portfolio, we wanted to provide a little bit more protection to the upside. So we went with an up 125, which I think is the most any of our peers have done. I'm not saying it's going to be the most forever, because maybe somebody looks at our up 125 and wants to do an up 125 or an up 150 themselves, but that's the reason why it was done up 125 instead of up 100. And then in terms of the upsizing, we had such a fantastic turnout when you go through the exercise. And what happens in one of these convertibles is you do kind of a private marketing piece first. So we actually started speaking to investors on Tuesday, and all day Tuesday, all day Wednesday was allocated to speaking with investors. And I spoke to nearly 40 institutional investors in 2 days. It was nonstop, every single day, every 30 minutes. I didn't have time to go to the bathroom. Like, it was all day, both days, high quality blue chip names, hedge funds in there, names that you would recognize. And I think one of the things that was really unique to our offering was every single institutional investor that we met with submitted market orders. That is pretty unusual. Usually you get about 60 to 70% of institutional invested submitted orders. We had 100%. So every person that I spoke with and I communicated the story to understood it, it resonated with them, and they submitted orders. And so that was a really, really powerful thing, because what it meant was that we had about $2.6 billion of demand for our $300 million raise. And so because we had so much demand, because there was so much institutional investor interest, that's how we were able to upsize while still actually driving the price down, because it was like almost 9 times oversubscribed.
So there you have it, guys. I'm going to leave it there. There's a little bit more to the call. If you guys want to listen to it, you can go on Kama Sutra or just go on Ben's X page, and there will be the link there. But I want to know what you guys think about BitFarms. Is it bullish? Everything that you've heard, if there's any concerns or things that you think are not bullish, let me know down below in the comments, and make sure you guys are subscribed. That way you never miss a new video. I'll see you on the next one right here on the channel. As always, crypto on.